Hello, my name is Zach Owens. I'm a financial analyst. I haven't posted on this account in multiple years. I primarily used to focus on Bitcoin. I mainly only really traded cryptocurrencies. I did have some experience in traditional markets and equities. However, it was not my focus on this channel, and I never really posted about this. In the past 2 years, I've landed an internship at an investment firm, and I've been working there for multiple years now. I focus on equity markets, and I've completely redefined my strategy. And yeah, I'm a much different investor, and I think I took that time to kind of restructure my thoughts and opinions on the markets and how I approach them. And I think that was very beneficial. I think there's no point in making videos if I'm not truly educated and if I can't truly teach everybody else from my experience. So yeah, um, my new posts are going to be completely different from what they were in the past. And yeah, no reason to dwell on the past. More now that I should focus on what my new strategy is and how I approach things now. So yeah, I'll just go over just by going over generally what markets have been doing. So currently, especially year to date, we've really struggled to do anything. Just clear consolidation and a very, very bad action on the indexes, especially on QQQs. What this essentially is has just been a rotation out of tech, in my opinion, of especially large tech. If you look at the RSP, which is the S&P 500 equal weight index, this index is holding up completely fine. It's above a 21 EMA, above the 9 EMA, holding up very, very nicely. Even small caps too. I mean, it's not like small caps are breaking out, but they're not doing anything like how the Qs are looking. I mean, there actually hasn't been too bad of accumulation volume down here, but yeah, the Qs are definitely struggling. We rejected the 21 EMA. Well, actually, a lot of EMAs back here, and we've struggled to break above this 9 EMA over the past 2 days. Typically, this market, it's like we get some bearish action, then we just get a stick save at the end of the week on like Friday or something. It's kind of similar to what happened right here. Is a horrible action, then just a huge, massive candle like that. But there has been somewhat of a change in character since Friday last week. We've just kind of struggled to get above this 9 EMA on QQQ. SPY doesn't look terrible. I mean, it definitely doesn't look good, but the Qs are definitely what's struggling mainly, and that is because of big tech. I mean, you can look at Amazon, Apple, for examples. Yeah, Amazon's doing terrible. Apple's struggling. You can take a look at Meta. Meta's struggling as well. So just a lot of big tech has been struggling recently, and that's not even my domain, but it is important to pay attention to the indexes because obviously it does affect what happens in your own portfolio. But yeah, so there's just been a lot of consolidation year to date. Massive bull run. I mean, this is the whole tariff scare. But yeah, I mean, generally I think things look fine. I don't think there's too much concern in terms of general economic issues or job issues. I mean, down the road we're going to have some issues with the whole AI job thing, but it's not really a concern right now. But yeah, so my strategy mainly focuses on small to mid cap companies. I even have some micro caps in there. My smallest market cap, I believe, is 20 million, and that's Watt. So I run a very concentrated portfolio. I only have about 15 positions, and my top 5 positions account for more than 50% of my total equity. So yeah, what I try to invest around is thematic, the importance of thematic exposure. So you can kind of see that by my different baskets of assets. I have the grid and power. So this is taking advantage of the massive bull run in restructuring the grid and the need for power, mainly for AI. I mean, it's also the thing that I like about the grid and power basket is because it's kind of it's not directly related to AI stuff, but it does get some uplift from it because generally we need to further electrify everything in our society, further automation and stuff, but it's not as directly exposed to the AI thing as something as like an NVIDIA or something. So I really like this way of playing on it. So yeah, this is one of my biggest baskets. Here, I'll actually pull up what my so my largest basket is my AI supply chain. So these are companies that are in the supply chain of the whole AI build out. So they all kind of encompass different niches within the AI supply chain. I try not to have too much overlap between my positions. I try to remove as much redundancy as I can in my portfolio. I want every single stock to be in there for a specific reason. So AI supply chain is my biggest basket. Then is the grid and power basket. Then is my edge compute basket. So these three stocks, and what I mean by edge compute is typically when you think of data centers and AI compute, you think of the massive data centers that are being built, by a lot of companies at this point. But that's typically what you think about when you think about AI data centers. And what this basket encompasses is more applying it to day-to-day applications. So OSS, for example, makes small ruggedized computers for mainly defense applications. Just today, they actually won another contract. I mean, contract was only 10 million, but to 10.5 million. It's honestly a stupid run up for a contract of that size, but that is regardless of the point. I think they're very well positioned to benefit from edge compute in defense applications. Cena is more of a play on on-device compute, so you can think of like phones, that type of stuff. The main really seller on this is humanoid robotics, so that's gonna be a big portion of it. And then Watt isn't as much as a traditional edge compute option as these two. Watt is more about wireless power transmission and making it more efficient, the way businesses and logistics operations run, by converting RF signals to DC energy. So this removes the need for small little batteries and whatnot. I'll actually go through and explain these other companies as well right now. So my AI supply chain basket, so THR is Thermon Group. So they have a very diversified business. They used to be heavily concentrated in the oil and gas business. However, they diversified and they have a liquid load bank cooling segment, which is growing very, very rapidly. And that's what that is about. So very nice chart on them. VF is a networking stock. I mean, just beautiful chart. They had another double beat back here. Great chart. Great company. They had an acquisition. I think it's called the Spiriant acquisition, which has seriously transformed their business for network testing applications, which is very important for AI. Amkor is a semiconductor packaging company, so they're more directly placed in the supply chain of AI and semiconductors. They actually have a facility that's being built in Peoria, Arizona, so that should be coming online, I think 2027, 2028-ish. SMID is more of a niche operator. They produce glass substrates. So traditionally semiconductors are manufactured using plastic substrates, and this is a severe bottleneck in the AI supply chain due to the way that they warp under heat and whatnot. So glass substrates allow us, I think, for about 10 times denser connections with semiconductors. So they fill a very key bottleneck in the AI supply chain, and they sell the picks and shovels for this. So they make the actual machines that make the glass substrates. ENS is a battery manufacturer, so these have applications for data centers, but they also have, I think it was I forget exactly what it is, Brentronics, I think, was the acquisition, and it kind of opened up the opportunity for more defense applications. But they're just a very, very nice battery producer. Good valuation, lots of multi-theme exposure with that. So PLPC makes parts for the electrical transmission grid. So the main thesis behind this is reconductoring, which this is replacing the conductors on current electrical grid and current electrical transmission equipment. So reconductoring can allow for like 2 to 4 times faster and better connections through the electrical grid. So this is going to be extremely important. Even Trump says our grid is tired and old. That's exactly what he means, is we need to restructure our grid in order to further the electrical abilities of the country and allow us to have more capabilities in AI. LAR is kind of a picks and shovels. I've owned this since the 2s, so this, honestly, I kind of just throw it in this basket, but they make lithium. It's just an undervalued company. I mean, I've owned it for a significant amount of time. I have a very low cost basis on it, so I don't even really worry about this position anymore, but I still think they're undervalued. But key lithium producer in Argentina. We then have my defense segment, so one of the biggest things, I mean, Trump, I mean, said 1.5 trillion defense budget. I'm sure that's not going to happen, but it just does signal a willingness and ability by the administration to further our defense capabilities. So this is my fourth largest basket behind the edge compute. So I have Stratasys. So these guys are an additive manufacturing company. So they do 3D printing for defense applications. They have a very diversified business. So it's not just the defense segment in this. I don't think they don't highlight it on there, but they also make like dentures and stuff like that. Bone replacements, stuff like that. But Hegseth has made a very clear indication that we need additive manufacturing in order to increase the speed of our defense applications and our defense technologies. So these are mainly going to be like 3D printing of like parts for like, I don't know, like missiles, not missiles exactly, but I'm just saying stuff like that. Laser is a directed energy weapon company, so they mainly operate in counter drone warfare, and they're scaling up to counter hypersonic missile defense. So this is a very unique company. Directed energy weapons is a very big innovation in the defense industry. They traded a pretty hefty valuation, but they are a one of one in this aspect. There is some companies that do other things, but these guys are the ones with the real scale. Cypress Solutions, these guys make power modules and different PCBs for mainly missile applications, but just super undervalued, and they're down the what's it called? What am I looking for? They're like down the supply chain. They're not like this. What I'm saying is I'm not buying a Lockheed, I'm not buying a Northrop Grumman. I'm buying the suppliers that provide the parts for them. So very, very key supplier of these parts, power modules mainly. They also do some cryptography, which is kind of interesting, just some multi-theme exposure within the defense industry. Inflection is a neutral atom quantum computing company. So they just IPO'd through a SPAC. The merger just went through like just a few days ago. So, I mean, chart's doing whatever. I'm not really worried about it. It's more about the fundamental picture behind them, as quantum sensing technology is of utmost importance for our government. You can kind of just see a few examples of this, like our strike packages in Nigeria. I believe about 25% of them missed targets, and this was due to GPS jamming. So quantum sensing technology is going to be extremely important for GPS denied environments. So the thing with them is that they have just a very cheap valuation in comparison to other quantum computing companies out there. And the thing is that they have actual applications that they are winning contracts for right now. So this is my favorite quantum play. I think it's a really nice addition to my defense basket. Then you have my subsea defense and oil infrastructure. So this is kind of a niche basket. It kind of fits in with defense, but I didn't want to throw it in there. I kind of wanted to separate it. So FET is more of a pure play on the oil side of things and oil infrastructure, but they are transitioning to subsea defense. So they make ROVs, remotely operated vehicles for underwater applications. So fixing like pipelines, fixing oil, underwater oil, just all of that type of stuff. They had an acquisition that increased their capabilities in like Canadian hard oil and stuff, which is really interesting. I'll probably highlight this more later down the road, but just a really nice chart on them, clear accumulation on the volume and whatnot. Then I have OII. This is my third largest position behind VAV and ENS. So OII is very similar to FET, as they do underwater oil infrastructure, but they have actually already shown an inflection of their defense business. So they're making what's called the Freedom AUV system. So these are underwater autonomous drones that are used to monitor seabed infrastructure. So mainly like cabling, underwater cabling. So China and Russia have clearly shown an ability and a willingness for a war of attrition. They do not want to just shoot missiles at us, for example. They want to take out our technological and like knowledge capabilities. So there's already been some examples of this. I believe it was Russia that took out some of the underwater cables. This is more of a NATO thing, but the US is scaling this tech as well. So I'll definitely make videos going in depth into each of these, but just kind of an overall overview of what each of these companies is and why I invest in them. And the one thing that you will notice across all the board here is that they all have thematic relevance, is that there is a macro trend that is pushing them to succeed. So the grid and power is driven by the whole AI thing. We need more power. The AI supply chain kind of just explains itself. They're just more specific and niche operators than the AI play. So I'm not looking. The thing is, the biggest thing about my strategy is I'm not looking for the biggest and most obvious plays. I want to find the niche, small to mid caps that can seriously show an inflection in their business and seriously grow. So that's really the big thing here. So edge compute, that's a play on advancing AI applications for more day-to-day exercises and day-to-day applications. Defense is obvious enough, and the subsea defense is mainly based upon the willingness for other countries to attack subsea cables. So yeah, I really try to focus on finding one-of-one companies. So companies that do not have many peers. So when this macro trend takes hold, they are going to be one of the only beneficiaries of this. So this doesn't apply blankly to every single company I own, but I really make an attempt to find those one-of-one companies. I think the biggest examples of is SMID, Laser, probably Inflection, 100%. Those are probably the biggest examples, I'd say. There really is no peers for these guys. They seriously are a one-of-one company. So that's one of the biggest things, is that you need to focus on finding small to mid-cap companies. And the reason for this is, we'll just say Apple for an example. Let's say Apple has an 80% market share over phones. Let's say they transition to a complete monopoly, 100% market share. That's not going to propel their revenue that much. Moving from a 1% market share to a 5% market share, that's going to bring some real gains. So you really just want to identify businesses that are going through an inflection. So something that's changing, some macro variable that's pushing this. So oftentimes, you'll pay attention to what Trump and the administration has to say. I mean, they'll literally straight up tell you what to invest in. It really is not that hard. You just want to look at where the money is flowing. You don't want to just buy the Apple, the Meta. Oh, NVIDIA is going to make the chips. He's going to make the GPUs for the AI stuff. That's obvious. Everyone already knows that. You need to focus on finding small companies that people have not found. And you need to identify catalysts that are changing their business for the better. This is one of the most important parts about your investing. It's not even the whole small to mid cap thing. You could do this thing with large caps, but you need to find a reason that the business is inflecting and changing. And you want to play a re-rating. There needs to be a reason for the company to be valued in a different way. So you just need to identify the companies that are going through change, and you want to see it visible. You don't want to just speculate blindly. That's not a good thing. I mean, there is a level of speculation with this type of investment, but you need to see clear indications that this is happening, or some type of macro variable that would be pushing this. You don't want to just shoot out blindly and just throw darts out on the board just randomly. There needs to be proof that something's happening, in my opinion. And this is where, kind of looking at the fundamentals is a lot more important. So you want to see, revenue growth, you want to see them winning contracts, stuff like that. But, I mean, some of these things even just benefit, just from Trump shooting out a tweet. I think one of the best examples of this was when I don't own this anymore, but LEU. So this is a nuclear enrichment company, uranium enrichment company. So whenever Trump would tweet out about, nuclear energy, this stock would pump like no other. And the reason for this is they are the only uranium enrichment company that is publicly traded, a domestic uranium enrichment company. So when this is pumped for a reason, such as Trump tweeting that we need to push nuclear power, they are going to be the only beneficiary of that. So yeah, that kind of goes over my strategy. I run a very concentrated portfolio. I mean, you want to listen to what the greats say. Drunken Miller says you want to put all your eggs in one basket. Yeah, you do. You want to bet big if you find something good. So I'm not saying you run a portfolio of 4 to 5 stocks. I think it's also important to have very diversified exposure across multiple themes. But you don't want to own 50 stocks. Yeah, this is a mistake that I made in the past, and this is one of the other reasons that I definitely had no business making videos and recommending different equities back in the past. I was very spot on with my Bitcoin trades and my Bitcoin analysis. That was really my forte for a while, but I had zero idea about any of these types of things that you should be thinking about. So, yeah, that's just a basic overview of my portfolio. The biggest takeaway should be that you should try to invest in one-of-one companies that are either a pure play or do not have many peers that you can compare them to. So when this trend takes hold that you are looking at, they are going to be one of the only beneficiaries of that. That is one of the most important things. I would probably say the second most important thing is identifying key catalysts that would be changing the business. So, with the nuclear example, Trump pushing for nuclear energy, it's a huge catalyst for it. The grid thing, I mean, it's obvious. China has a lot more, I forget the numbers exactly, but China added significantly more electrical capabilities and energy generation capabilities than the US did in the past year. And this needs to change if our country wants to succeed in the AI race. And honestly, just in general, we need to push this. That's a huge catalyst for it. The AI thing, it's obvious enough, but the defense, Trump and the administration pushing for more defense spending. I want the primes to not do buybacks and either invest in new technologies, stuff like that. So number one-of-one companies, pure plays if you can find them. Second of all, you want to identify the catalysts that are pushing the stock. And also, one of the most important things that people just forget is you need a nice chart. I mean, if something's breaking down, there's zero reason to keep owning it. I mean, you could be right about your fundamental picture, but at the end of the day, the market is always the one that's fully correct. I mean, don't take that with a little bit of grain of salt, because obviously the market misses things, but either way, your goal with investing should be preservation of capital and growing your capital as best as you can. So there's zero reason to be bag holding something. There's zero reason to sit in a drawdown of 10 to 15% or more and just sit through it for a month, and then you recover back to break even. There's zero point in that. You should just take your losses and just move to the next idea, because clearly something's not working. So you just need to think, honestly. I really think this investing stuff is not that difficult. You just need to look at what is going on around you, and you need to analyze that and use that information to your advantage. You cannot just invest blindly in the most obvious companies. Sure, Microsoft is a great company. I'm sure everything that they're doing is going to go well for them. But is it going to really propel the share price in the way that you need to? No. You want to find the next Microsoft. You don't want to invest in these big companies that everyone knows about. Everyone on CSNBC and Yahoo Finance are pumping, saying, "Oh, it's a great company. Look at Microsoft. It beat earnings, whatever." Honestly, this isn't even true anymore. Honestly, these companies have been doing terrible. And the problem is the problem with these companies is that they are the capex. They are pushing the capex. So these are the companies that are investing in this technology, and they're pushing out so much money to get this technology done and improved. I'm sure in the end, this stuff is going to be very beneficial for them, especially Amazon. I think Amazon is probably the biggest example of this. AWS is not valued in their business at all, in my opinion. So undervalued in their business. But you want to find the downstream beneficiaries of this stuff. So when Google, Amazon are pushing for massive capex and AI data centers, you don't want to just buy Amazon, because they're not the ones that are getting the direct benefits, the right now benefits. You want to look at the people that are supplying that. So I think probably one of the biggest things in my portfolio is finding suppliers. So probably the best example of this is SYPR. All of the primes are pushing out for massive increases in missile defense. The POC-3 missile system is being scaled rapidly, and these guys are a direct beneficiary of that. They are getting benefited right now. They are getting their orders in right now to fund this stuff. All of these AI supply chain picks are the exact same. They're the downstream beneficiaries of that, and I think that's one of the most important things you need to find. So I think just overall, you just need to know, with this strategy that I run a concentrated portfolio. That's one of the biggest things here. is I bet big on the ideas that I like. That is one of the most important things if you seriously want to outperform this market. Um, and yeah, just invest in one of ones, pure plays, and just use your head. You can't pick the most obvious things. You need to think, critically think about what is going on around you, and pick what you think would be the biggest beneficiary of the largest trends that you see in society. These baskets are what I think are the most important trends that I want to be investing in. And these stocks are the companies that I think are going to be the biggest beneficiaries of these trends. And yeah, that's probably about it. I just wanted to, this video kind of just serves as like just an introduction to my general strategy, what my portfolio is, and what's changed over the past 2 years. So, yeah. I mean, I conduct very deep fundamental analysis behind all of these. I make sure that they have a very structurally sound business. I'm not investing in, shit codes that have just burning cash and diluting shareholders. That's not at all what I invest in. I do have some speculative picks, such as Watt. I mean, you look at this chart and you're probably like, what the fuck? But that's not at all what you need to be thinking of. Let me pull it up. Like, there's a clear inflection in this business. They have 100K revenue back here. There's a little bit of growth, but this is a serious growth. They're finally scaling their revenues because they're winning orders. And one of the also biggest things is they're dropping their operating expenses. So there is a clear inflection that is happening in this business. It is speculative, but I'm not just shooting into the dark. There's clear indications that something is changing. Their gross margin has been holding at 34% for the past 2 quarters, and it's not negative like it was back here. And I mean, it doesn't look good, but their net margin is definitely improving. It's still negative 166%. But the thing is that they're not scaling yet. They're not fully scaled. They're still working on that. But there's clear indications that something is changing. And I'll highlight this idea more later down the road and give specifics. But I mean, one of the most important things is that this company has 12 million in cash. 12 million in cash for a $26 million market cap. It's nearly 50% of their entire market cap is in cash. So I don't think they'll generally need to dilute shareholders from now on. They have 13 million in cash, and they're burning 2.6 million in operating expenses per quarter. That gives them a runaway into the next year easily. So, I'm not just shooting out in the dark here. And also the thing is, there's clear accumulation volume is also the thing. You want to buy around these moving averages. Buy a nice spot. It's like right there would have been a nice spot. Right there probably would have been a nice spot. Right here is actually a nice buying spot right here. And you don't want to see breakdowns on a chart. You want to look at you don't want to just look at a daily. You want to look at a weekly. So if you scroll through all these charts, I mean, other than Watt, but also the thing is, look at this volume on Watt. Clearly, something is changing. Clearly. But you look at these charts, none of them are significantly below these moving averages. They're above them all. All of them. They're all holding some type of support. And even if they're not, I likely just have a very deep cost basis, so I can sit through those drawdowns. But, yeah, that's just been a general overview of everything, my strategy, and my portfolio. But I'll be releasing more videos. I'll go in more in depth into my thoughts behind each stock, why I'm buying them, whatnot. I'll give my general market ideas. I'll also probably revisit some Bitcoin ideas. I'm of the general opinion that this is probably going to be a major low here. But, yeah, I'll present that information down the road. But I hope you enjoyed. I hope you got some benefit from learning how I invest and what my strategy is. And I'll see you soon.